Getting audited is a big fear among taxpayers, but odds are that won't happen. Robert Frank explains.
Audits of the nation's highest earners fell to their lowest levels on record. New data from the IRS shows that tax collectors audited a little over 6% of all returns for those making $10 million or more. That's down by half from a year earlier and down about 80% from the recent peak in 2011. The drop was across the board for the wealthy. Those making $1 million or more, those making $5 million, both saw declines. Now, it's unclear how much revenue has been lost from those fewer audits, which have declined now for 7 straight years. But studies show the top half of 1% of Americans accounted for 20% of all underreported income. That works out to be $50 billion a year. Why the lower audit rates? Well, budget cuts to the IRS are the main reason, which has resulted in sharp decrease in the number of auditors.
The IRS is a walking dead bureaucracy. It's been eviscerated. The budget is way down, and you can see it in these numbers. You are more likely to be audited in the United States if you make $20,000 a year than if you make $500,000 a year.
The battle is heating up in Congress over giving the agency more money, especially after the new tax law created new loopholes and opportunities for avoidance. The IRS estimates that every dollar spent on enforcement generates $5 in revenue. Each collections officer generates about $2 million a year in revenue, so it's a good return. Now, Republicans say they don't want to keep throwing money at a large bureaucracy. But President Trump is proposing a 1.5% budget increase this year and adding $15 billion over the next 10 years for IRS enforcement. Of course, the IRS doesn't have much voter support. Polls show it is the least popular agency of government, and that's low. For Nightly Business Report, I'm Robert Frank.